Well, it's finally happened. Everyone who bought NVIDIA stock thinking they owned the AI revolution just discovered they've been betting on the wrong side of the trade. And if you don't understand what I'm about to show you, you could miss out on gains that make NVIDIA's 200% run look small. So here's what just happened. TSMC, the company that literally manufactures every single NVIDIA chip, just reported earnings with 50% operating margins and 60% profit growth. But the stock dropped 4% while NVIDIA keeps climbing. This disconnect is creating what might be the biggest mispricing in the AI market right now, and smart money is already moving. So if you've been watching the AI boom at all, you've seen NVIDIA's incredible rise. The stock is up over 200% in the past year, making Jensen Huang one of the richest people on Earth. Everyone's piling into NVIDIA stock thinking they're buying the future of AI. But here's what 99% of investors don't understand. NVIDIA doesn't actually make anything. They design chips. Someone else builds them. And that someone is Taiwan Semiconductor, TSMC. Every single H100, every Blackwell chip, every GPU that NVIDIA sells for $30,000, TSMC manufactures all of them. Without TSMC, NVIDIA is just a company with blueprints. It's like owning the recipe for Coca-Cola but not the factory that bottles it. So this is where things get interesting. See, back in 2023, NVIDIA tried to diversify their manufacturing. They approached Samsung, Intel, even explored building their own fabs. You know what happened? They came crawling back to TSMC within 6 months. The other foundries couldn't match TSMC's 3-nanometer process. Not even close. Think about this for a second. NVIDIA, the most valuable semiconductor company in the world, is completely dependent on one supplier. If TSMC decided tomorrow to raise prices by 20%, NVIDIA would have to pay it. No negotiation. No alternatives. That's not a partnership. That's dependency. But while everyone's obsessed with NVIDIA stock hitting new highs, TSM stock is trading at just 25 times earnings despite controlling the entire AI supply chain. This chart shows it perfectly. NVIDIA's valuation has completely disconnected from TSM's, even though one can't exist without the other. So let's look at what TSMC just reported, because these numbers are absolutely insane. Revenue hit $30 billion in a single quarter, up 39% year over year. Operating margins came in at 49.6%. That's higher than most software companies. Net profit margins at 42.7%. For comparison, Apple's net margin is 25%. Microsoft's is 36%. TSM is literally more profitable than the companies it supplies. But here's the kicker. Their 3-nanometer technology, which is what enables NVIDIA's latest chips, now makes up 24% of revenue, up from just 6% a year ago. And they're the only company on Earth that can produce these chips at scale. Samsung tried and failed. Intel is years behind. It's a complete monopoly. So why does this matter for investors? Well, my neighbor just told me he put $50,000 into NVIDIA stock last month because AI is the future. And he's not wrong about AI. But he's betting on the salesman when he should be betting on the factory. It's like investing in McDonald's franchises instead of owning the company that supplies all the beef. But here's where this gets really interesting, and this is what nobody's talking about. The US government just passed new semiconductor regulations requiring any AI chips sold in America to have at least partial domestic manufacturing by 2027. Guess who's building the only advanced fab in Arizona right now? TSMC. This isn't just a factory. It's a $40 billion insurance policy. While Intel struggles with their US fabs and Samsung hasn't even broken ground, TSMC's Arizona plant is already running test wafers. They'll be producing 4-nanometer chips by next year, 3-nanometer by 2026. So think about what happens when tariffs hit. Every NVIDIA chip manufactured in Taiwan could face a 25% import tax. But TSMC can shift production to Arizona and bypass those tariffs completely. They could become the only company that can supply tariff-free AI chips to the US market. That's not just an advantage. That's a monopoly within a monopoly. And the timing here is critical. In the next 90 seconds, I'll show you exactly why the next 6 months could determine whether you catch this trade or miss it entirely. Plus, I'll reveal the 3 other companies that are even more dependent on TSMC than NVIDIA, and why one of them might be an even better play. So while everyone's focused on NVIDIA and AI, they're missing something huge. Apple is TSM's largest customer, accounting for 22% of revenue. Every iPhone chip, every M-series processor for MacBooks, all manufactured by TSMC. And Apple just signed a deal guaranteeing TSM's entire 2-nanometer capacity for 2025 and 2026. You know what that means? Even if AI demand slows down, TSM has Apple's business locked in at premium prices. It's like having a guaranteed income stream while everyone else fights for scraps. And with iPhone 17 launching with AI features soon, Apple's chip orders are about to explode. But it gets better. AMD, Qualcomm, Broadcom, they're all fighting for TSM's remaining capacity. The company literally has more demand than they can supply. They're turning away customers. When was the last time you heard of NVDA turning away buyers? Now let's talk about something that should make every growth investor pay attention. TSM's return on equity just hit 34.8%. Their free cash flow for the quarter was $6.2 billion. Actual cash, not projections. But what really makes TSM special isn't just their technology. It's the barrier to entry. Building a competitive fab would cost $200 billion and take 10 years. Even if you had unlimited money, you couldn't buy the expertise. Here's an example that shows how insane this is. Intel spent $100 billion trying to catch up. They're still 2 generations behind. Samsung threw $150 billion at the problem. Their yield rates are half of TSM's. This isn't a moat, it's the Grand Canyon. Here's the comparison that reveals everything. NVIDIA trades at 65 times earnings with 73% gross margins. Incredible numbers, right? But TSM stock trades at just 25 times earnings with 59% gross margins. Half the valuation for similar profitability. So here's what this all means for your money. NVIDIA is a great company with a great story. But TSMC is a great company with a great business. One trades on hype and hope. The other trades on contracts and cash flow. The market is giving you a gift right now. The chance to buy the AI infrastructure play at half the valuation of the AI story play. In 5 years, people will look back and wonder how TSM stock ever traded this cheap. Just like they wonder how Apple traded at 15 times earnings in 2016 or Microsoft at 20 times in 2014. But here's the thing. Recognizing opportunity and acting on it are 2 different skills. Most people will read about TSM stock, agree it's undervalued, and then buy more NVIDIA stock anyway because that's what everyone else is doing. That's exactly why this mispricing exists and exactly why it's profitable for those who act. The choice is pretty simple. You can chase the stock everyone's talking about at 65 times earnings, or you can buy the company that makes that stock possible at 25 times earnings. One of these trades will look obvious in hindsight. The question is whether you'll see it in advance. I'm Andrew, and that's it for this video. If you found it valuable, consider sharing it with those who need it. Also, consider watching my latest video on the best ETF to invest in 2025. I'll see you there.